coming through. So we got what, 1475 crores in profits, and I think it's largely in line, maybe a little better, at least on the profits, and revenues seem to be slightly better, slightly below, lower. 9100 crores compared to about 9300 crores, which was the revenue the expectation on Asian Paints. So numbers are coming through from the largest paint maker. Domestic volume growth at about 12%. Mangalam should be with us. We just put out the preview about 20 minutes back. So we'll have the review with Mangalam.
So volume growth is in line, because he was telling us it should be about a 10 to 13% volume growth. So volumes appear to be in line, but there is a little bit of a miss on the revenues. I think we have Mangalam with us. Mangalam? Okay, we'll get to Mangalam in just a bit. So those are the numbers that we have. 9,104 on the top line, missing street expectations by about 180 crores. So that's about a 2% miss on the company's top line. Though the volume growth has come in line with street expectation, and EBITDA margins are ahead of the CNBC-TV18 poll by almost 130 basis points. So there is margin expansion, solid margin expansion. The company's margins are 22.6%, compares with 18.7% a year ago. Mangalam is back with us. Mangalam, weigh in. Looks like a bit of a revenue miss, though the other parameters, volume growth, margins, profits appear to be in line.
Well, these are good numbers coming in from Asian Paints, notwithstanding the miss that we've seen in the top line. And that's largely because raw material prices have perhaps fallen a lot more, and the company's passed on those price cuts to the customers itself. And as a result of which, the realizations of paints have declined. On a year-on-year basis, decorative paint value growth has been 5.5%. The street was working with a number of about 7.5%. But despite that, the volumes have grown at around 12%. What's interesting is that despite the company having priced the products lower and having passed on those price cuts, the gross margin expansion has been around 500 basis points. That's a little higher than what the street expected. And as a result of which, on the EBITDA itself, there is a bit of a beat. It's come in above 2,050 odd crores versus street expectations of just under 2,000 crores. What's more important, however, is the commentary that the management has spoken about, where demand was subdued in the second half of the quarter. Pre-festive season was pretty good, and they are expecting double-digit volume growth to continue in the second half of this year, with margins between this 18 to 20% band itself. So, irrespective of the weakness that we're seeing in the top line because of lower realizations, I think the internals for Asian Paints look pretty strong. The stock hasn't recovered from the lows, largely because the street is now awaiting what happens in the next couple of quarters, where all the other players, including the likes of Grasim, roll out their products to the shops.
Yeah, well, it has spiked quite a bit from the first dip that came in when the market kind of was fearing the worst, seeing that top line miss. But given the volumes, given the margin expansion, I think it's a recovery, but not quite in positive territory. We have Naveen Kulkarni, CIO at Axis Securities, as well, to join in and sort of comment on this. Naveen, what do you think? 12% volume growth, very smart margin expansion. What's the view on Asian Paints now?
Yeah, the numbers look good to me. The revenue growth is probably slightly lower, but that is on account of the input costs being passed on, lower input costs being passed on to the customers. Overall, margins have expanded higher than what we were expecting. Profit numbers are definitely pretty strong. So overall, I would say that these are good set of numbers. Asian Paints at this juncture, I would say, looks good to me, primarily because the stock hasn't done much over the last 1.5 years. So multiples which looked optically very, very high are now much better than what they were. And of course, it's a sector which continues to deliver, or a category which continues to deliver double-digit volume growth, which of course in the whole consumption space is kind of rare now, right? So overall, operating numbers look good. Asian Paints looks good to me.
The company said margins have gained significantly from growth in luxury products and softening of raw material prices, coupled with operational efficiency and sourcing efficiency. So there is a growth in luxury products, which is aiding the company's margins this time. Naveen, weigh in on the valuations of Asian Paints. How does it compare with historic valuations? Are the valuations a bit of a concern?
Yeah, so valuations, of course, for Asian Paints had run up a little bit. So that was a bit of concern. But we have had a significant period of time correction which has happened. So almost it's been a little more than a year where the stock has been at these levels, right? So the time correction has played its part. Still, overall valuations from a long-term perspective are still a little higher. But of course, they are slightly coming down. So comfort in terms of valuations is building up. I see absolute upside from current levels for Asian Paints over the next 12 months. Maybe 10 to 12%, but I think that's something which can very easily materialize for Asian Paints, considering management believes that double-digit volume growth is going to sustain for the second half of this year, and overall category continues to be very, very strong.
And in the paints, entire listed universe, which one would be a preferred bet?
Yeah, so from the listed universe perspective, considering that there is going to be some bit of disruption which could take place in the category, so I would still stick with the leader, Asian Paints, because the chances of the second order or the third order players losing market share in the short term could be higher. But Asian Paints, being the market leader, has got better capabilities to defend its market share. And also, paints as a category is a long gestation product, right? So from that perspective, Asian Paints still stands out for me. And if one wants to look at this category, I think this is the stock that one can allocate capital to.
Okay, all right, Naveen, we will leave it on that note. Thank you very much for joining in and giving us your perspective on those numbers and the stock. We will take a quick break, come back on the other side and get a conversation going with Aman Chauhan, fund manager at Abacus Asset Management. Find out how they're looking at this big fall and what the strategy is in the market now.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.